In 2006, Li Lu gave a lecture at Columbia Business School, the same school where value investing was developed by Benjamin Graham and David Dodd. And luckily for us, this lecture was recorded. So without spending a single dollar, we can take part in one of the most important lectures ever concerning value investing. But before we will do that, let's take a quick look at Li Lu's life story, because it is quite incredible. Born in China during Mao Zedong's Cultural Revolution in 1966, Li Lu's early years were very difficult, as his parents were sent to labor camps by the government, leaving him to navigate through various orphanages and caretakers. In 1989, he emerged as one of the student leaders in the Tiananmen Square protests. After a bloody end to the protest, he had to flee China for New York at the age of 23. He almost did not speak any English, and yet he got accepted to Columbia University. And ultimately, he became one of the first students in Columbia's history to earn 3 degrees simultaneously. Inspired by a lecture from Warren Buffett, Li Lu started to invest, paying his way through college that way, and in 1997 founding Himalaya Capital Management. Charlie Munger has stated that Li Lu is the only outside manager he has ever invested with, and has described him as the Chinese Warren Buffett. Okay, so if people like Munger believe that Li Lu is special, it is probably wise to try to learn from him. Oh, and apologies for the quality of video and sound, but this is the only recording of this lecture that is available. Well, maybe in the future, artificial intelligence will make it beautiful and clear. So, the first question Li Lu is going to answer is a very fundamental one. What is value investing?
Who can really tell me what are the 1 or 2 things that really sort of defines a value investor from everybody else? They're basically 3 attitudes, straight out of the teachings of Ben Graham. That A, you think yourself as basically not a paper shuffler, in the sense you really think yourself as owner of the business. And B, you sort of you demand a huge margin of safety when approaching investment, and see that somehow you sort of think everybody else is different. So this is where the Mr. Market analogy come in. These are 3 things actually kind of they all come into really coming from one perception, which is you think yourself as an owner of business rather than kind of owner of a piece of a paper. And you own a small piece, and therefore you really don't control the business. And therefore sort of is almost self-defense to demand a large margin of safety, because whatever value you perceive may not be there because you can't control it. And then because you thought you're really owning a business, and therefore you really don't care, if you're owner of business, you don't trade that all the time. And so therefore you think that you are somewhat different from just about everybody else in the market participant.
That is a beautifully simple way of explaining what is value investing. 1, you think of yourself as an owner of a business. You feel that you are not buying a piece of paper that you hope to sell for a bigger price in the future, but that you are buying a piece of business that you will own as long as you want to. 2, you demand a margin of safety. Because if you own a business but you are not running it, in most cases you can't even influence the management in a meaningful way, then you have to create a buffer that can save you when things start to go in a direction that you did not anticipate. And 3, you are fine with being a contrarian. You are fine with being criticized or laughed at by the majority. Because if you want a margin of safety, you will have to buy companies when their shares are down. And why are they down? Well, because the majority think it is a bad investment. Most of the people want to get rid of those shares because they believe it will lose its value. And you have to be on the other side of this transaction, believing that the majority is wrong. But can anyone be a value investor? And do we have what it takes to become one?
So my first kind of a point I want to leave with you is really to understand who you are, because you will be tested through all this period of time through your future career development, that you're going to really have to really face to ask yourself whether you're a value investor or you're not a value investor. Now, if for whatever reason that your personality is built to be a value investor, that probably means that you're somehow, genetically mutated throughout the process of evolution, that you're very comfortable being in the minority, which is not really very natural to human beings. Throughout our human evolution process, that most of us survive because we stick with the group in face of large mammals. That's the only way we can survive. And so it is really over, tens of thousands of years of evolution. It really is, deeply ingrained into your genes. But occasionally you will find a small percentage of people really survive despite the fact that they really have a different kind of a gene. It's almost through a mutation process that group of people survived. So that's the first thing. You have to really be very, very comfortable, being very much by yourself. And therefore you would naturally adopt the attitude you're right, not because other people agree with you, but because your reason, your evidence are right. It is common sense. But of course, as people said, common sense is the least a common commodity. Most people don't think that way. And secondly, that you would probably spend most of your time truly being an academic researcher instead of a so-called professional investor. Most of the time you're going to spend as a professional investor, as a value investor, not a professional investor, is really to be an academic, to be a researcher, to be a journalist, actually, to basically have insatiable curiosity, to really and try to figure out how just about everything works. Because investing really, the more you know, the better off you are as an investor. And so you just have to be naturally interested and curious just about everything. Any kind of a businesses, politics, science, technology, humanity, history, poetry, literature, everything really affected your business, basically. So you almost have to, I don't want to scare off people. You don't have to, put it that way. It will help you. It will help you. And then occasionally you would find a few insight that all of those studies that really give you tremendous opportunities that other people just for whatever reason couldn't deal with.
If we want to be value investors, then it is important to remember that we are not right because most people agree with us, or that we are wrong because most people disagree with us. We are right because our own reasoning and evidence are right. And the second point is probably even more important. We have to really understand the business and the industry. We have to put a lot of work to find what other people are missing. That is why all the analysis we do on this channel are just the first step. They are a first quick look that makes it simple to decide if we want to study more and spend more time on this business, or is it a pass? That is my mission here, to make investing simpler. Not easy, because it's not, but just simpler. To save you time so that you can study only the companies you really find interesting. And finally, Li Lu emphasizes a very important point concerning taking action.
But when the things happens, you just have to really devote day and night into it. Day and night into it. And that's why I'm glad my wife is actually here, so that I know all this missing night, what I was doing. You know, the opportunity like that don't come very often. So when it comes, you have to seize it. You have to do everything complete, but you have to do it fast. And that's why you have to train yourself all those time. And you don't have to do a damn thing. Put things into bank, that's okay. You don't have to buy anything. But when opportunity comes, you have to jump on it. And that's what I did. When you finish all of the things, it doesn't take all that long, but you take intensive work for a short period of time.
That is such an important point. We have to study, we have to follow businesses, we have to be prepared to spot opportunities. And that is exactly why I created our stock ranking, to have all the analysis in one place, to easily see when an opportunity emerges and market starts to be irrational. And when Li Lu talks about seizing an opportunity, it reminds me not only of Eminem's song about opportunity coming once in a lifetime, but also of Buffett saying that it is only logical to invest your money in your best idea instead of investing it in your 30th best idea. So we have to learn. We have to understand more and more of the world around us. But at the end of the day, we also have to take action. Knowledge that is not put to use is a wasted opportunity. Okay, before we finish, let's listen to one more piece of wisdom concerning 3 things we need to do before we can say that we understand the business, we understand the industry, and we are ready to pull the trigger and become owners of this specific company.
Okay, I always tell my analysts, I only need 2 things from you. And if you want to be an analyst, and you need to be an analyst, of course, before you become a good investor, you want to provide accurate and complete information. Accurate and complete. Most people failed on both scores big time. And you just have to go to that extra length in order to get it done. If you can't succeed on that one, you can't succeed in this business. Because most of the time, you're going to stand alone, basically against just about everybody else. And if you're not really confident about what you know, and you're confident about your prediction, what other people know or don't know, you can't possibly be putting that kind of a money when the thing's going into a free fall. When it looks like you're really losing all your money. When everybody else is laughing at you. All the smart guys. So you must be able to first do accurate and complete. And the second thing, in this business, okay, most money are not made on those stocks I was just talking about. Your biggest amount of money you're going to ever make is not from that. Those are things that really get your bread and get your basic business going and give you the basic returns. They do not provide you outsized return. Even if both stocks went up 5-6 times, they do not give you the outsized returns. If you're a value investor in the truest sense, okay, so there are 2 schools. I mean, you can do the Tweedy Browns, you can do the Ben Grahams, or you can do the Buffett and Munger type, which is more of kind of what I'm interested in. If you want to be that one, your return is going to come from a handful, no more than number on the 2 hands, in your entire life of maybe 50 years of tremendous insight. Tremendous insight you're going to gain that no other people have. How do you really build that insight? There's no other way other than basically continuous curiosity, intense curiosity, continuous study for your whole life.
Okay, so what are the main takeaways here? First, we need to find accurate information. And if you want to know where I look for data and news, then check out my video about best websites for investors. You will see the link to it at the end of this video. And finding accurate information is not that hard thanks to technology. But we also need to find complete information. And that can be trickier. Of course, websites like Seeking Alpha or Google Finance are super useful. But to really get all the details, we need to go to investor relations pages of any company that we are analyzing. It can be a lot of reading, but it can make us a lot of money. And finally, we need to become lifelong learners. We need to become wiser every day. And through the years, this knowledge will start to compound. And finally, it will allow us to find an edge, to find what most other investors missed. And if we just find few such investments during our entire lifetime, we are going to do very well. And if you would like to learn from other great investors, then check out my videos about Terry Smith or Peter Lynch. Or learn where to find data by watching my video about best websites for investors. Thank you so much for watching and see you in the next one.